Hello, my name is Eddie Tofby. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Search International Limited. And here's your weekly technical analysis of London and New York cocoa plus New York cotton. I'll start with ICE Europe cocoa. 7 weeks ago, the rally finally petered out topside, and we've headed low ever since then. The market hesitated 4 weeks ago, and I put that down to the market meeting the medium moving average, currently at 1694. The short medium moving average also currently at 1693, and the long medium moving average currently also interestingly at 1694. Before pushing lower 3 Tuesdays ago. Thus we saw the market entering back into the old doldrums, once again starting from about 1680, stretching down to the 1650 area, and then separately from about 1647 down to the flat neckline of the August to October 2020 move, currently 1631. The 1680 to 1650 doldrums were rather abruptly dispatched on Thursday the 8th of March with a key reversal down, passing right through the July 2020 to April 2021 uptrend, currently at 1660. The follow through lower to this key reversal down passed through the neckline and became the low of the current move on Monday last week. Since then we've halted, recovered a bit, became capped by the broken uptrend and held around the neckline. We're looking right now very much like the action back in early November 2020. A small congestion area between 1590 to 1615. The congestion is centered either side of 1610. And I suspect this may be why we've held here this past week and a half. This also impacts on an idea I floated last week. It is to look at the whole July 2020 to date action as a possible giant sideways triangle, with the broken July 2020 to date uptrend, currently at 1660, as the lower trend line, and a September 2020 to date a downtrend, currently 1829, as the other one on top. Unfortunately, the breach below the lower trend line 2 weeks ago and the subsequent lack of a move lower, plus some consolidation, may indicate a false break lower. Hence, something new would be needed to cause a reaction. Well, we may just have something new. Looking above, you can see the medium moving average currently at 1694. The short medium moving average also 1693, and as I mentioned, the long moving average currently also 1694. And they're all moving into a possible bow tie formation of the moving averages. Now I realize that they are in the wrong order going in, but this is very much worth keeping a close eye upon, especially as it may be the reaction that we're looking to cause a stimulus in this market. ICE US cocoa. This contract still does appear to be a much clearer and easier daily chart here compared to the London contract. 3 weeks ago the market broke down through the lower tie, currently at 2472, of the early July, early November 2020 bullish pitchfork. On its own, this would be just a rather large and important rolling support that proved its worth back in late February. I was also ready to retire this bullish shift pitchfork unless something dramatic happened to avert this idea. Well, something did. What now may be a larger and more serious action. A super diamond pattern. A huge one, stretching from roughly the end of April last year and into June this year. Hence, what we saw was a breakdown through the lower uptrend of this pattern, currently at 2478. And it looked like we may or would see much weaker prices on Easter Monday. We had a big combined key reversal down and bearish evening pattern, engulfing pattern. This action broke down through and closed below the interesting 50% Fibonacci line of the December 2017 to April 2018 move at 2377, and was only halted by the lesser Fibonacci level at 2362. This lesser Fibonacci level is the 38.2% Fibonacci level of the October 2019 to February 2020 move. And it halted the market again the following Friday, with the help on a closing basis of the 50% Fibonacci line at 23.77, thus forming a small double bottom. That caused prices to rise last week and early this week back within the super diamond pattern. It looked very much as if the move lower out of the super diamond pattern may therefore have been a false break. That was until yesterday's huge key reversal down that closed prices back below and outside the super diamond pattern again. Only there hasn't been a follow through lower today. In fact, today looks either like a small bullish arami or maybe an indecisive spinning top, depending on your point of view of this market. Like most things, this move down is not clear cut. Nevertheless, I've placed two targets below. Target X at about 2170 is the initial target for the super diamond, whilst target X1 in the 2020 area is for a full move lower. I've yet to see if the market will attempt to fulfill either of those after such a false break lower. ICE US Cotton number 2. The main features here over the last 4 weeks or so have been the breakdown below the neckline, currently at 87.32, the January to March obtuse head and shoulders top, the subsequent drop to the then combined April 2020 to date uptrend, currently at 80.36, and the November 2020 to date uptrend, currently 80.16, and the possibility that, until last week, we have been forming a possible bear flag, or bearish halfway hesitation type action. I'd even gone as far as to place potential targets below, target X for the head and shoulders top in the 76 even area and a fuller potential target X1 in the 73 even area. However, last week I also discussed the following idea, and I quote, "There is the possibility still just in my mind that the whole April 2020 to date action could be a bearish bump and run reversal top pattern. I'm not convinced as yet. I would like to think about it a little bit more before I start labeling and placing targets anywhere. But it is out there now." End of quote. Now, neither this bearish bump and run reversal top nor the head and shoulders top could have taken into account last week's and this week's action. The move up away from the uptrends, over the medium moving average, currently 82.47, up through the congestion from August to September 2018 between 81.30 to 84 even, and the halt at the short medium moving average, currently 86.06, was a little unexpected. Indeed, I suspect the market could have tried higher except for these following factors. Well, there's obviously the short medium moving average, then there's the congestion from July to August 2018 between 86.84 and 89.19. And then there's the neckline overhead. Even now there are strong forces in play here, as last Friday saw the culmination of a 2-day bearish below the stomach pattern, and the following day, or following session, this past Monday, saw a key reversal down. Yet none has dented the market. It has stayed where it has been since last Wednesday. There are some heavy forces in play here, and this action may take some time. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final bit.